Good morning, everybody. Mike Niemiec here with some early morning grain and oilseed comments for Monday, June 4th. Well, as we start off a new week, I guess maybe we'd take a quick look at last week, the way we closed, and we're sharply on the defensive. We were down in the neighborhood of around 70 cents in wheat, down around 30 to 40 cents in corn and beans, down around $15 in meal, and down around 150 points in soybean oil. It's kind of a weird ending to the week in the sense that we had the last day of the month on Thursday, but a new start of the month on Friday. But then again, it was the end of the week. And what we've really been seeing in these markets seems to be an exodus of positions more so than a rebuilding of positions that we have been seeing in the past. We continue to see, as far as reflection in the open interest, with the open interest down 12,000 contracts in the corn roughly on Friday on the preliminary volume and open interest sheets, down in the neighborhood of around 5,000 in the beans and in the meal. We have been starting to build shorts in the soybean oil market as a reflection of the commitment of trades report, and basically have seen somewhat of a wipeout of short positions in the wheat market, and we're just kind of finding a new trend in it. When I talk about open interest, I also like to refer to the commitment of trades report that has also been showing the reduction of positions rather than a rebuilding of positions, as mentioned before. We see where the corn commitment of trades report is now dwindling for the managed money near zero. We're still on the plus side, but they're still net long, but nothing like they had. The big positions were in the beans and in the soy meal. The beans were unchanged for the week, but they have been coming on down. The meal was down, and as I mentioned before, the managed money is now starting to build net short positions, or adding to net short positions in the soybean oil market. Wheat was one position that was sizable net short. They got a little bit long, and now those positions are now starting to go by the wayside. But it is this managed money in the beans and in the soybean meal that has really been the key feature to the downside in the markets of late. And we saw the weight in the markets on Friday with both the beans and the meal making new lows for the move, along with the soybean oil. Corn and wheat testing it, but most of the weight in the beans and the meal as a result of the net long positions that they've had. The world economic situation continues to get a little bit grimmer. Talk of China slowing down, Europe power problems. Our unemployment number that came out on Friday here in the U.S. once again has people more or less moving to the sidelines than rather building positions, as we once seen roughly around 2 years ago. So as we continue to retrench, we did have a little bit of a bounce in the overnight trade to start off a new week. We were up roughly a dime in the wheat, corn, and beans, up around $8, $9 in the meal, but still on the offensive in the soybean oil. Palm oil prices last night made a new low for the 2012 year, as well as Chinese prices are on the defensive. So we have somewhat of a mixed macro world out there. The economic situation isn't as bleak as it was last week, at least to start off this week. We're on a little bit of a bounce at the start of a new week. I guess what we haven't talked about yet, which everybody will want to talk about here as we move our way through June, is weather. And that's kind of a mixed bag here as well. We're kind of be somewhat in the cooler side early this week with no rain, but then we're going to be needing rain here during the month of June. That's forecasted in the extended forecast, but then temperatures are supposed to warm back on up. So I would say probably a mixed bag for both the bulls and the bears. We'll get our crop condition numbers out this afternoon. They're looking for corn conditions to go down 2% versus a week ago, and we'll get our initial number for soybeans, and they're looking for in the neighborhood of around 65 to 70% in the good to excellent category, and we'll be moving along with our winter wheat harvest. We'll also get exports out later on this morning. They're looking in the neighborhood of around 20 million bushels for wheat, in the neighborhood of 30 for corn, and 15 million for beans. So to sum it up, we're on a little bit of a bounce after beating it up last week. I think most of it has been an exodus of money. We're trying to see if we are going to rebuild again as far as new longs coming into the marketplace. But if economic situations remain weak, and if the weather remains conducive during June and July during the gut slot of the growing season for corn and soybeans, as can we say, probably see more retrenchment in positions, as the commitment of trades report still suggests people are net long grain, or corn at least, and the oil seeds. Once again, this is opinion of myself, not ADM and or ADMIS. Thank you.